So, hi everyone. It's my pleasure today to host this call with Ed Ludbrook. So, Ed is the founder of Wealth99, and as you well know, Wealth99 is the pioneer of emerging crypto wealth sector, and that's where people invest with institutional grade security and also the personalized support they need to confidently succeed. Now, today's topic is what's driving today's markets and what it means for investors. So crypto has been quite volatile of late, and crypto investors have been wondering what's happening in the market, what can they do, and Ed is going to address this today. So over to you, Ed.
Hey, that's fantastic. How is everyone? It's a good evening and it's a good morning, depending where you are in the world. It's great to see everyone. I've enjoyed creating these webinars. We're doing them every we're trying to do them every couple of weeks. It is a very unique time in this whole space of whether you're talking crypto assets or tokenized assets, or in fact any sort of assets. I think it's pretty crazy. People who tell me that in rural sector or mining sector or property, it's all pretty crazy. And I think from what we understand, a lot of people sort of wonder what's happening. And there's been some pretty crazy things happen. So look, I'm going to provide education. If we've got to do this disclaimer to help you understand. If you're going to make decisions, make sure you're very clear about what you're doing and get advice should you need it. But the reality is that the market is very volatile. It's crazy how it's moved often. We look at the crypto market; it's down in the last couple of months, dramatically. It really is a lot, and it really was not expected by anyone. And I get a little bit skeptical about people making predictions, because I have a saying that people making predictions are predictably wrong. Okay, if there's one industry, they're often wrong. But it wasn't just us. When you imagine something like Amazon and Microsoft have dramatic sell-offs after delivering actually what are spectacular results. They had really sort of terrible results, and you sort of, there was a lot of commentary about, hey, what's happening in the world, and really, what is the stock market falling out of bed? What's really wrong? And I'll tell you something that people don't know, which I find fascinating, is the impact of AI has actually hit stock markets. There is a huge software area called software as a service. So basically, rather than you buy the software and you load it on your own servers, what happens is you download it. A lot of very famous company called Atlassian, where the two guys who founded and run the company are two of the richest people. Companies like theirs. So you download their Jira software, which is office productivity software. They've gone down dramatically. I think they've lost 70% in the last 12 months. And I was looking through other SaaS companies, software.com, HubSpot. Lots of these businesses have been absolutely hammered because they worked out that AI agents that they can do they're going to be able to do a better job a lot cheaper. And you can see that announcement there. I want to explain what it means. It's sort of Claude Cowork. So Claude is one of the great AI software platforms. AI like Grok, like OpenAI's ChatGPT. So Claude is at the moment the most successful one as far as companies are concerned. And what they did was that they got 14 developers. Okay, 14 developers basically recreated a very famous software platform in 14 days. in 14 days. So, sorry, 11 of them replaced all the software in 14 days. All these AI agents wrote all the software, literally like 100,000 lines of code in a couple of weeks. And everyone went, holy hell, these guys are going to murder them. So in reality, when you hear the stock market's off, it's certain sectors and it's the impact of AI, whether it's in the software area, which is a sort of multi-trillion-dollar area, but also they look at these huge, what I call hyperscalers, who are meant to be spending something like $600 billion this year on creating data centers and things like that. And it seems bad, but actually the underlying stock market is really, really strong. The Dow Jones, which is all the industrial, it's the real economy, as they say, it just had a record of 50,000. Okay. And companies like Apple are still really strong. And so if you look at that and understand that the US GDP is expected to hit 5%. They could even hit 6% this year. The last quarter of last year, they said it may be about 3 or 4%, even after the knock of a slowdown. What you got to understand is the US economy is the driving engine of the world, and anything more than 3% is really good. 5% is surreal. When you imagine the scale of that industry, what it means is that, if it's a $30 trillion industry, that they'll add $1.5 trillion of growth in 1 year. It's like surreal. It's so powerful. And because they're strong, the rest of the world. And that's the first thing to understand, is that for all the talk of, the economy's in trouble, that's actually bollocks. The economy, as you look at the United States, is extremely strong, and that will flow off around the world. Now, what you need to understand when it comes to the crypto world is, why is there this sort of chaos? And the reality, if you ask me, is that the first thing you've got to understand is that the crypto world is undergoing an evolution that we in Wealth 99, and we've predicted this for a couple of years. And we've basically said, hey, look, this industry has been pioneering for 15 years, and it's time, when the big boys come in, the market will evolve. And that's because if you look at every coin, underneath it is an ecosystem. It's it's a whole lot of companies doing things that they get a demand for a coin. Do you understand that? Does that make sense to you? So, it's not that a coin just trades on a market. If you analyze why that coin should grow in the future and the story that will drive it today, you've got to have that, what's called intrinsic demand, to drive the value. So what's happened is the market is maturing, so it's looking at those ecosystems and saying, okay, what about Ethereum? Why will Ethereum? How big will it be? How big will Tron be? And so basically they're turning around and saying, well, actually, a lot of these coins don't have a big story underneath them, because it's got to justify $1 billion market cap. It's a currency, right? It's not a share where there's some value. So it's got to have this underlying ecosystem with all the potential transactions. They don't have to be doing it today, but it has to, when they look in the future, it's got to be credible. And you've got to understand that all of these ecosystems are competing with each other, especially the big ones. So, and Ethereum is competing with Solana, which is competing with a Cardano, which is competing with a BNB or a Ripple. They're all competing. And what you got to understand, there are lots of coins competing for the same world, and it's only the strong businesses that have attracted the projects, that have the adoption, that are getting the money. They're the ones that are going to win. So when we look at who are going to be the winners, we turn around and say, hey, look, it makes sense for the big majors. So there's sort of 10 coins that are general. So the projects to sit on. So putting Bitcoin aside, when you look at a Ripple, a Solana, an Ethereum, a Tron. You know, these are projects which are general. All sorts of blockchain or applications can sit on these projects. And all of the new projects will look to say, okay, we want to put our project on a blockchain. Which one do I use? You know, do I use a blockchain that no one really knows about? And having had to make that decision myself, in reality, I had to make that decision with the Daxi blockchain, and it's like, you know, you spend a lot of time analyzing it, and you do go for the big ones. And so that's what's happening. All the projects, all the major projects are going on the major blockchains, which means that all the little guys, the hundreds and hundreds and hundreds of other projects and blockchains, they're just not getting the deals. So it's natural that the future is focused around a few big boys. And then the next thing is that certain projects, certain sectors can justify their own coins. So if you're the gaming industry is big enough to have a blockchain ecosystem, a blockchain that is very specific to that world because it's so big, there's so many of potential transactions going there. So there's sort of 10 of the really general ones. There's between 20 and maybe 50 of the specific industry ones, because you're talking gaming, media, finance, logistics, and there are probably another 20 that I haven't mentioned. So there's those top ones. And then lastly, there's an ecosystem of all the new potential ones. So the sort of startup world who haven't had their big boom, but they have the potential to be a sort of $1 billion market cap, uniquely strong in a certain sector. Do you understand what I'm saying, guys? It's important that you get that, because it reflects what's happening here. Because if you look at the actual crypto market, what I've done here with this image is that I've shown what is the sort of top asset, all right, and then what's its price, and then I've got this. The other thing is the all-time high, right? I don't know whether you can see that thing when it says Bitcoin at minus 57,000, all right, minus 45% underneath the red thing. That says is that Bitcoin is 45% off its all-time high, which was around 126,000 US dollars per coin. And then you go down and you see it's down 60, down 18, down 60, down 54, down, forget the stable coins, down 70, down 35%. So it's obviously the big guys are off their peaks. You know, the ones that are big, but they don't really have the same credibility, like your Dogecoin or your Bitcoin Cash, they're down a lot more, and that's and so what this does is it shows that the market is still waiting for the opportunities to come through, that the institutional buying that was expected to drive the market isn't quite in the market, isn't quite in the market at the moment. But the fundamentals behind these big coins are there. That's what I want you to understand. They're all there. We just got to wait for the big boys to come in and push the market, and they will, we think, soon. So the next thing you've got to understand, and I keep talking about this, and I'm saying this so people understand what's happening and they're aware of the concerns, because this, as you can see, what I'm talking coin number 81 to coin number 95. And what's happened is that competitive thing means that anything that isn't one of the sort of top coins, but has already had its run. So what was a tiny coin and is now, some of these coins have been worth billions, but if you can look at how far they're off their market cap, I don't know whether you can see that, but it's sort of 90%, 93%, 98%. Forget the stable coins like the euros and things. So 50, 87, 97, 96, 87, 59, 95, 90, 92, 96. Do you get the point, guys? they're really off their highs, and because the losses are so big and because they haven't really moved, it basically means that the sort of mindset, if people are holding that, there may be a bit of run, but there really are concerns. And if you look at what we expect to happen this year, like we expect the demand to come into Bitcoin. We expect the whole stable coin market to really drive the coins like Ethereum, like Tron, that have this sort of, like Solana, that have stable coins. Stable coin turnover is up more than 500% in 12 months. It's like really major. The tokenization of major financial assets, all of the big financial companies are saying that that's happening. Regulatory clarity, we're still waiting for the Clarity Act to be passed in the United States. It looks as though that might happen soon, which is a sort of a major thing to drive it. And look, just the political will behind Trump needing to get the crypto boys happy so he can win the midterms, that's all going to pump this year. And we internally keep on going about precious metals, okay? And look, I'll go as far as saying if you don't own precious metals, you seriously need to get them, because the fundamentals behind precious metals, and I've spent a lot of time looking at the fundamentals, they are really good. When it comes to gold, as far as printing money, the Americans are going to hit 40 trillion soon. Trump just asked for another $500 billion of money to being printed. So, and that's the same all around the world. And so the push behind gold will keep going. And we keep on going on about silver. And the reason we do that is not just because it's part of that whole money printing story. As we keep saying, it's part of a tech thing. The tech boys, unless you reckon that they're going to stop, slow down making electric vehicles or robots or drones or solar panels, unless you think that's going to happen, there is a supply crisis, and it's going to get worse and worse and worse. So the story behind silver is not really a devalued money, protect your money against inflation. It's a tech story. And, whatever you think about Elon Musk is building millions and millions and millions of robots. And in fact, I just saw an email, a thing on YouTube, and they've just done something big in China where they had all these dancing robots for this major thing. It was incredible. And you just look at these dancing robots and you just go, oh, they're just going to make millions of robots. Well, in every robot, they need silver. Okay? And at the moment, they are not making enough silver for the demand, and it's going to get worse. So, we're unashamedly bullish about silver. And when it comes to average person owning silver, you've either got a choice of owning bars, coins, or tokens. And tokens are the better way. Okay, it's just the new way. It's safer. It's easier. It's probably cheaper. In fact, it's definitely cheaper. Like, you only have to see the queues outside ABC Bullion in the middle of Sydney to just really realize the demand behind this thing is crazy. And it's a real hassle to pick up these, especially it's silver. Silver weighs more than 40 times gold when you imagine the value. The value is different. It's the difference between sort of $100 an ounce and nearly $5,000 an ounce for the same value. Do you see what I mean? So look, tokens are the easiest things. We are literally, we were the pioneer of these tokens, token concept in Australia. I don't think there's anyone in the UK who's done more than us. And so look, when it comes to being successes investing in this space, your sort of mindset is everything. I'm sure you know this because the strategy is pretty simple. And the point is that, as the legendary investor Warren Buffett says, you buy when there is blood on the streets, even if the blood's your own. Even if you feel as though you've lost money, that's the time to buy. So when you hear about the sort of, oh, crypto's down, or, have you seen that silver corrected, after growing nearly like this, it drops by 10 or 20%, like, who cares? That's the time you go in. And the idea, it's dollar cost average, dollar cost average, dollar cost average. People, what is it? Dollar cost average. It just means that you buy some now and buy some more in a week, 2 weeks, 4 weeks time. Buy some more, buy some more. You never try and hit the bottom, never try and pick tops. You just keep the dollar cost, because you want to own crypto, and you want to own Bitcoin and Ethereum and assets like that in 1 year's time and 5 years time. You want to own silver in 1 year's time and 5 years time. Okay. And so, oops, okay, I'm not going to do that. I'm not going to do that. This thing is funny to me. Here we go. That image was one which was about auto investing. And so auto investing is a feature which is on the Wealth 99 thing. And all it does is just makes sure you're going to continually auto invest into the marketplace, that you do this dollar cost averaging. For anyone who knows anything about investing, everyone goes on about dollar cost averaging, especially when the market corrects. And so all we want to do is, rather than, we're not about telling you some sort of smart strategy to sort of, to give you some sort of weird edge on the market, because what you're seeing now is the smart strategy to give you the edge, and everyone will tell you to do it. So I hope you can be smart about this. And I always ask people these days, how much silver do you own? How much silver do you own? The amount of silver going through the business at the moment is up many percentages, as people are just waking up and going, holy heck, I really must get into this market. And we hope you share this message with other people. You will have friends, you will have family, you'll have work colleagues, and they will also be wondering what they're going to do with their investment capital, where they really need to get into these markets. So that's my story. And I hope I was hoping it was going to be super simple, because look, at times like this, you need to be aware that the market is corrected, but you need to understand that the underlying fundamentals are fantastic, and this is just an opportunity. Get it? And so you just dollar cost average into the marketplace, and that's how to do it. Okay.
Thanks, Ed. That was super interesting. Lots of golden nuggets to digest for the viewers. And this concludes today's webinar. As Ed said, look into dollar cost averaging and how that may apply to your crypto strategy. Now, as Ed said, dollar cost averaging is super easy with Wealth 99. Just log into your account and check out the auto invest option. It's located on the left-hand side of your dashboard. And with that, and wherever you are, I leave you with have a good day or have a good night. Bye.
Thanks a lot. See you later, guys.